It is Monday, June 10th. This is Income from Options Weekly, where we look at the setups for the week and for 0DTE traders that are selling premium. Looking at the SPX right now, and it is basically unchanged. It was a little bit lower to start the day, but we've rallied back. We closed right near that 53.50 level on Friday, and there is a lot of dealer gamma around that level. And as there are, just as a general rule of thumb, the 5300, the 5350 level, the 5400 level. So those big round 50 numbers, and 0.25% expected move for the rest of the day. That is just 13 IV. And you've probably heard me say this before, but if you have a weekend effect where vol gets lowered going into the weekend, and then if you don't see a big move on that Monday, it can stay pretty low. And if we just went sideways the entire day, it would stay down at 12 IV. Now, if it made a move and it made a decision to start the week in one way or the other, you will see that expected move change. But for now, just 0.25% in either direction, and that gives you about 53.30 to the downside and 53.60 to the upside. So very tight. As always with 0DTE trading, keep an eye on that IV. So that 13 IV is about half of what we were seeing last week when we were going into some economic data, just to put it into perspective. The iron condor right here, 53.60, 53.30. If you take that a little wider, with the market unchanged, that makes sense. The market is looking a lot like it might go sideways today. But you only go one strike before you get to that 4 to 100 risk to ratio. So we're at 65 to the upside and 25 to the downside. So you can see how tight that is and why you perhaps on a day like today might want to think about it more in credit put spreads and credit call spreads. But as of right now, this is the iron condor. And it may just go sideways. But as you can see, even going to Friday, it is not those upper strikes. It's below the highs from Friday. You can see that right up here. So, be aware of that on a low vol Monday. Let's look at levels out into the end of the week, and we'll discuss what's coming up this week, because there is a really big Wednesday in store for the market, and we'll get to that in a second. But going out to the end of the week, and you can see what I'm about to talk about on Wednesday, we had an expected move of about 1.25% out until Friday, and the iron condor levels are 54.10 and 52.80. So you're getting just outside, just above that 5400 level and just below that 5300 level. If you took that a little bit wider, get this down to the 350 to make 150 risk reward, and we're looking at about 54.35 on the upside, 52.55 on the downside, and so that's about 90 points in either direction. The big events of the week are on Wednesday, and we've got the CPI in the morning at 8:30 Eastern, and then we have the FOMC, the conclusion of the two-day FOMC meeting, with a rate announcement and a press conference. Most importantly, the press conference. Not many expectations of any move on rates, but we will get a statement, an updated statement, and we will get a Powell presser, and we'll see what kind of mood that the FOMC is in after all of this recent data and if anything's changed from last month. But as you can see, the expected move out was 1.1% expected move just out to Wednesday, and then you finish the week with a 1.25% expected move. The expected moves before Wednesday, very small. Like as we talked about, the 0.25% expected move today, and not even 0.5% for tomorrow. And that's a day and a half of trading, and not even 0.5% expected move out into tomorrow. So very low vol, very low expectations for movement the first 2 days of the week, and a lot of that Wednesday to Thursday. The market's pricing in some volatility.